Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I'll be doing the reviewing part of the Asian session live market analysis and the forecast, what I have given it on 6th of June. And today we are on 10th of June. Between 5 and 5:30 GMT, I'll try to review the forecast, what I have given it, which was given as session-wise forecast from Monday to Friday. All the 3 sessions of the day, Japanese, European, and US sessions. Besides, I'll also do the market reading, and I have noted down the initial lows and the highs around 3:30 GMT, and that will be compared with that of the current market levels to find out what the intention is being of the players. Besides, I'll also touch upon the trading strategies which we can use in order to limit the risk and maximize the profit. And for those of you interested to be in touch with me or try to get more information, can contact me through email, dr@i-knowindices.com, and my Skype chat ID is iknowindices@hotmail.com. Then the website is i-knowindices.com. So the 3 components of my trading system, namely the derived forecast, then the market reading to fine-tune the forecast, and the trading strategy to see that we don't lose money in the market. Now this was the forecast I gave on 6th. And as you noticed that they firmed up and then subsequently made the slide on Wednesday and Thursday during that of the European session. And then they are just at the lower level now. They are expected to rise all through the day. The swing and rise during that of the Japanese session, followed by that swing and firm up, a nominal rise, then again rise during that of the US session. Next week, it will be the second week. They are expected to make the trending move, and that will be an upward trending move in the case of Euro and GBP, as well as in the case of USD and USD CHF. They are expected to gain alternatively the levels in all currencies. Now we look into it, you can see that they are showing negative net change. Euro, USDN, and GBP are showing negative net change, indicating the contrarian move, because Euro and GBP are showing the USD gaining move, and USDN is showing the USD weakening move. And that is how they make the contrarian move. Besides, you also come across that Canadian dollar and Australian dollar are showing the USD gaining move to start with. Then subsequently, they are expected to reverse the market. Alternatively, they are expected to gain today the levels in the case of Euro and GBP, followed by that USDN. Now, with regard to the levels in which the currencies were swinging, now the estimated low was 1.1275. Only today they have come to that particular area, 1.1292. I noted down now. Currently they formed 1.1290, and the high was 1.1416. And they are expected to take it further higher later on today and also next week. And in the case of JPP, they came down to 1.4352 and went up to 1.46, and they are expected to gain further upward. And currently they are just trading around 1.4446, which is higher than that of the low what they are shown it this week. And in the case of USDN, they came down to 106.25 and now went up to 107.91. They are doing mostly the lower level consolidation to gain more about this particular level today and also in coming days. Then in the case of CHF, they came down to 95.65 and then gained level to 96. And they are expected to gain more levels today, along with that of Euro and GBP as a contrarian move. In the case of Canadian dollar, came down to 1.2655, lower than that of the estimated mathematically calculated low. So they are just showed the high 1.2983 and they are expected to gain slowly the levels to that of 1.28, and then followed by next week they are expected to gain more levels. In the case of Australian dollar, from that of 0.73 they have gone to 0.75 yesterday and came down again to gain more to the 0.75 area. Then subsequently next week they are expected to gain more levels. So all along you come across that all the currencies are alternatively gaining the levels and not showing typical USD gaining or USD weakening move. And that we need to understand. This is how the players handle the US dollar index, so that the people are not really able to track the index and identify what sort of moves could happen in the market. Now, with regard to the market reading, I noted down the initial lows and the highs around 3:30 GMT. In the case of Euro, 1.1292 was the initial low. They came down to 90 and currently holding around 95. A brief downward happened, and then they are expected to gain more levels, go above that of 1.1320 by close of Japanese session, and gain more during that of the European session. And in the case of GBP, 1.4446 was the initial low. They came down to 1.4444 and gaining above, so indicating a brief downward stop and to gain more above that of the high what they are set. Then in the case of USD and 106.91 is the low, which is intact, and 107.25 is also intact. They are consolidating it, and slowly they are expected to gain levels. In the case of CHF, 96.38 is the low, 96.54 is the high. They are not breached the low or the high. Net change is also 0.0, indicating they are simply consolidating it. And in the case of Canadian dollar, 1.2719 is the low, 1.2742 is the high. They just breached the high and went up to another 2 pips and then come down. So a brief upward stop and they are done. They are expected to make either way stop ends in the case of Canadian dollar and do consolidation near that of the low. Then the case of Australian dollar, 0.7409 was the initial low. They just breached it by 1 pip to 0.7408 and started gaining the level. 0.7438 is the high. They are not breached. So they have made a brief downward stop in the case of Euro, GBP as well as Australian dollar, indicating that they wanted to gain the levels in all the numerators to start with, because they just came below that of the initial low and raised above in less than 30 minutes. So that indicates that they wanted to gain more levels. So once they slowly gain the level, then they will be active in the case of majors during the late Japanese session. So during the mid session, they will be holding within the range. They have done the downward stop and they are expected to breach the high and go above during that of the late Japanese session from 5:30 to 7 GMT. So that is how they make the moves in the market. So we need to follow it carefully and then take trading decisions. Now the recommended trade for you today, I kept the buy limit order 1.1292. They just filled it and now it is a position, and I kept 1.1322 as the exit order and 1.1262 as the hedge order to limit the risk. So now this is filled. Again in the case of GBP, I kept the buy limit order around that of the initial low, and they just breached by 2 pips and gone up. So it is also a position. In the case of USDN, they are not still filled, and I kept it at 106.91. Still, they have not come closer to that. If they fill it, I'll take the position and then keep the hedge order to limit the risk. And once the position makes profit, I'll keep stop at entry and remove the hedge order and trail the stop in a profit making position and trail the exit order away from that of the market. So the market can either hit my trailing stop or the trailing exit order to protect my profit. So this is the way I trade on a daily basis, and I use the forecast, the trading, market reading, and the strategic trading technique so that I'm able to see that I totally got rid of the market fear. So ultimately, the traders need to understand how the players are making moves in the market. For that, the most important tool is the timings of the market. And the timings, there are 3 sessions in a 24-hour cycle: Japanese, European, and the US sessions. And in between, you come across the gap time of 30 minutes here between Japanese and the Europe, between Europe and the US, 30 minutes, and Europe and US to Japanese, there is 4 hours gap time. And during the gap time, they make the false move. Most of the time, they make the hits of the stops. Suddenly, they make a knee-jerk reaction during such time in order to create fear for that of the traders, using the previous day news or late night news and things like that, and they try to make a quick upward or a downward move during this gap time start of the Japanese session. Then they handle the majors during the early and the late sessions. Mid sessions, they handle the crosses. So you have to wait for the early session to take position and close it during the late session, so that will become a session-wise swing trade. And if you want to do intraday trade, if they are going to show, if the forecast says that swing and rise, swing and rise, swing and rise, then you can wait for the maximum rise to happen during the US session, especially for the weekend, and take the buy position and book during the late US session to get the maximum profit for the intraday trade. Then always keep in mind, they make the spread of 40 pips between the high and the low. That shows that they are active in that particular currency. The other currencies wherein they are not breached the initial low or the high, they are simply making consolidation just to make the market appear it is live, and they are not actually doing any quick upward or a downward move. So if you enter into a position, you may not be able to see profit. You will be forced to wait for a longer duration, and that might test your patience. So avoid taking positions in a currency pair where the spread between the high and the low is less than 40 pips. Then they handle only 2 pairs at a given time because of the margin constraint. So they have huge money power, but still that is being deployed to handle 2 currencies at a given time comfortably. After handling that, they come to another 2 pairs and handle it. That way, they are able to bring in the active moves in 2 currencies, and then followed by they are also active in the respective crosses. Say, for example, when they are making a spread of 40 pips, in the case of USD yen and GBP, then what they do is, it is almost close to 40 pips in the case of yen, and others it is less. Also euro somewhat, about 30 pips. So they are trying to bring in the market to the higher and the lower level and increase the spread between the high and the low. Then what happens, you find they handle GBP breaching the high or breaching the low. USD they consolidate, and when they are just making the moves in these 2 currencies at a given time, besides these 2, you come across the crosses of GBP also become active, the crosses of yen become active, and the cross GBP is also active. That way, they are able to bring in the volatility in those respective crosses. And they always make the sequential moves in the market, namely to start with the commodity crosses and the commodity pairs. Then subsequently, they bring in the volatility in the case of yen and yen crosses, then followed by that of the European crosses, Euro GBP as well as USD CHF, and the respective crosses, they bring in the volatility. And finally, the majors they handle, and finally the European crosses. That is how in a sequential way, after that they come back to the commodity price again. So they choose two currencies at a given time by that particular method. So if you got any question, you can ask me the question. I will be willing to answer those questions. My next webinar will be on 13th of June, coming Monday, and I'll give you the forecast for the next week, and also I'll explain to you how exactly they are expected to make moves in the market. Okay, Ambassador, AUD, what is likely to happen in the AUD? AUD is expected to gain the levels today nominally, probably to 74.60, and tomorrow, Monday, they are expected to gain more level and straight take it to 0.76. So avoid taking sell positions in the case of Australian dollar. Only in Euro and GBP you can do either way trades. The rest of the currencies, they will make one-sided move suddenly and you should not get caught. And they are expected to make upward move in all the currencies. So always buy near that of the low what they are set, and you will be very safe, irrespective whether it is a numerator or a denominator currency. Any other question, please? Okay. The comment about the Britain exit on the FX market. See, this is not new, and normally you come across such a referendum, undervoting, etc., which happen very frequently in the European Union and also in UK. And what happens? People try to create hype about it. Probably Britain might exit from the association it has made with the UK, and Scotland also. They just made such references, and every time we come across, even Greece was considered like that, whether it is going to exit or not, and they create the hype, and later on you find that it has not happened. And in 2009, when Euro GBP came closer to that of 0.98. Euro GBP, which is currently trading around 0.7879 level, which came to 98 level, and immediately which came to 98 level as the upward stopped, and immediately people said that probably Britain could use Euro as their currency, because it will come to parity. Immediately once it comes to parity, then Euro will be equal to that of GBP. So they may stop using GBP, they might use Euro. That is what they have done. But keep in mind that you have only the three major European currencies now in the currency market. The other currencies are there, but they are highly volatile because of want of volume. So Norwegian, Konar, etc. So you come across that Euro, GBP, and CHF are the three European currencies you find they are still traded. So from that of Asia, only the Japanese yen is taken into consideration as a major. So these are all the currencies trade against US dollar. That is considered as a universal currency. In such a situation, they are unlikely to get rid of. They may simply create the hype, but they may not bring in any exit, even though from time to time they will try to pretend as if they are going to exit. My past experience says, and also based on the market forecast, study, I'm able to envisage that GBP is expected to gain further upward move, and so variably British exit is unlikely to happen. Any other question? They create uncertainty by holding near that of the low for a prolonged period. This is the part of the game. They do it from time to time, so that the traders develop the market sentiment, and once they commit the position, the players act against them by making an upward move in all the currencies. Every time they do it, but they use different stories, so people don't really correlate it. If the same story is repeated, then people might know the end of the story, and then they will become smart. But if every time they use new story, but the story will be used to create the hype, then subsequently the hype will be discounted, and then they will say it is like the interest rate decision. So normally they give a hype that there is a possibility the interest rate might be reduced, and they will just give a projection like that and to bring down euro, GBP, etc. Subsequently, when the interest rate was unchanged, nothing has happened in economy, and only it is unchanged for the period. But for that, they will make a very quick upward move in the euro and GBP, and also in Australian dollar. You have noticed, because they said it is unchanged. There is no downward correction of the interest rate. That means economy is strong. That is how they give the interpretation every time. So it is something like a glass halfway has got water. Sometimes they will say it is half empty. Some other time they will say it is half full. That's what happens every time. But we fail to perceive that both are the same, and invariably we get confused and tensed because such hypes happen from time to time. Any other question, please? And especially the media is being used effectively to propagate such hypes. And also, when the hypes are being spread all over the world, you find the players find it very easy to bring in the volatility in the currencies. Ultimately, as trader, we are interested to know what the players are going to do, not interested in the hypes, because the hypes create the market sentiment and the players act against. If we don't follow the hype sincerely, we just use it or just recognize it as a trigger creating event, then we just ignore and start taking the positions based on that of the trend which prevails in the market. And later on we find that the market makes such a directional trend. And many times the traders take the buy position, but probably they take the buy at an early level, and when the market comes down quickly, immediately they become afraid. They think that the event is going to bring in drastic effect to the market and cut the position. Later on, see that market goes up. So if you are not having the hedging facility in our trading platform, then wait for the market to come to the early or the late sessions of the Japanese, European, or US sessions. At that time, they will bring in big volatility, and then when they make a quick drop, stop cutting the new low for more than 30 minutes. Then take a buy. Immediately, you will find the rise, book profit after keeping stop at entry. That way, we can capture the profit from that of the market. Strictly follow the timings. See, normally when you follow that of the technicals, we even though study it as 5 minutes chart, 15 minutes chart, 30 minutes chart, for 1 hour, 4 hour, etc. But we don't find the timings of the market in such charts, especially this particular time. And invariably, the traders are being diverted by giving the timings as the Japanese session, Asian session, European session, UK session, New York session, etc. They are all mainly to confuse the traders so that the traders don't really follow the market correctly. Yes, Jason, Euro and GBP are expected to rise today. All three sessions. So I'll show the forecast slide also. So today, 10th, Friday, 10th June. Swing and rise during the Japanese session. Swing and firm up, slow gain. And then afterwards, again, quick gains. Yeah, they are expected to reach, breach the current high and go still higher. Okay, no more questions. So I'll come back on Monday and give the forecast for the next week. So I take this opportunity to thank FX Trade for the facilities provided to present the webinar. And for those of you who have come here to listen to the webinar, and I want you to understand the market is manipulated. So try to read the intentions of the opponent so that you won't develop the surprise. Once you avoid developing the surprise, you find the market fear goes off. Once the market fear is not there, you are able to reason out and sense what is happening in the market. Then you will start doing buy low and book profit after the rise. So wish you all happy weekend and nice trading. See you on next week and come up with a new forecast for the next week. Thank you one and all.